Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Gary Lipsky. He is a returning guest who was on the show previously. It was episode GI85. He is a multifamily syndicator who has acquired over 3,000 units with a total value of $250 million. In 2022, Inc. magazine recognized his firm as the 25th fastest growing real estate company. Gary hosts the Real Estate Investor Podcast, which I was just interviewed on. He's a best-selling author, has built several different companies, co-produced 3 independent films, and started a nonprofit organization for underprivileged children. So thank you so much for being on the show today, Gary.
Charles, thanks for having me back.
So for listeners that missed that first episode, can you give us briefly about your background, both personally and professionally, prior to getting involved with what you're doing now in real estate investing with your firm?
Yeah, I was an entrepreneur for as long as I can remember. I started a restaurant delivery service in college. Before that, I shoveled driveways and auto detailed cars in high school for some money. I co-produced, like you said, 3 independent films in my 20s. And I think that's where I kind of learned, like, I love the creative side and I love the business side of things. And it was a really harsh lesson of, like, you have to make your day, you have to get it done, no matter, like, this is the money you have and you've got to make it work with whatever you have. So it was a really good training ground. And then, like you said, I started working with schools. We did after-school programs, outdoor ed, leadership development. We were working with 9,000 students, mostly at-risk youth throughout Southern California. And I had been investing in real estate during that time. And I had built up a really great team, and they really didn't need me anymore. And I was ready for my next venture. And so I sold that to a business partner, and it's still running, and got into real estate full-time.
Why did you choose real estate? I mean, there's so many different asset classes out there, and then multifamily more specifically, because as we know, there's so many different asset classes within real estate itself.
So I love the idea of, like, I can create tons of value by the way I look at things, and creatively and from a number side of things. Whereas any other business, it's really hard depending upon where you buy it at. So you could, whether it's a single family, a 10 unit, a 100 unit, I can extract massive value. And by the way I look at things and do my research. So it was very achievable to create massive wealth.
So tell us about your company now, kind of what you guys are doing, what markets you're in, what type of properties, and really what a strategy is, a normal strategy or business plan is when you purchase a property.
So we focus on a few markets so we can be experts in those markets. So we've focused on the Southwest. We bought all of our deals in Tucson mostly, and Phoenix. And we're looking for value add. So Tucson really became a market for us because the deals were less picked over, as Phoenix pricing just really took off the last few years. And Tucson, we were finding deals that we can increase NOI by 40%. We've done that across our portfolio. So these were deals that right from the beginning, we can create massive value for our investors. And so, yeah, value add multifamily, typically at this point, 150 units or more. That's what we're looking for.
How are you guys finding that now with deal flow where we are at this part of the cycle? That's a pretty tough area.
Yeah. So we've done one deal in 17 months. Certainly, we've underwritten a ton of deals and made offers, and like everyone else, where there's like a 10 to 20% gap in asking pricing. In 2022, there were 28 deals or more in Tucson, 100 units or more that sold. In 2023, there was only 3 deals, and I bought one of them. So, I mean, just a massive reduction in deal flow.
Yeah, that's crazy. One thing you mentioned earlier, which I kind of want to drill down on, is you were talking about being I don't know how you put it, but as a master in really an expert of the markets you're working in. Can you kind of explain how you've picked the markets and how you've, because you have a lot of people out there, like if they can't find deals in markets, like you were saying, they want to obviously do deals and they might go to different markets or change little criteria of what they're working on, stuff like that. And I have to applaud you that you've kind of like stayed the path, because it's difficult. Myself, the same way. We haven't done a deal since the end of 2022 as this is airing. But the thing though is, it's like you stay your path of what you're working on for syndicated deals. You've done other deals, but it's like, you stay the path of what you're working on and you kind of don't veer off that.
Yeah, yeah, you see different people getting into different asset classes as well, but we need those data points to make informed decisions. So even though we haven't bought a deal in Albuquerque and Vegas and Denver, we've been looking in those markets for, a year and a half, 2 years, made some offers, haven't gotten them, but we've acquired thousands of data points. So it allows us to know, okay, is this deal good? We've got our pipeline, a chart that we can look at, and vintage, median household income, crime, just different things that we can kind of take from a current deal to like a previous deal and say, hey, does this make sense? Does this not? Where are things trending? So it just gives us a lot more information to make more informed decisions. So that's really important. And sticking to that market, we have all the great broker relationships over the years. They know, like, and trust me. So if I'm competing with maybe someone that's new to the market or hasn't done as many deals, they know I can close. They're gonna push the seller, say, hey, he might not have the highest offer, but I can rely on Gary to get it done. And so that adds a ton of value. We also have the confidence of execution because we've been working in those markets for a while. We have a property management team that we like, and we know their strengths, we know their weaknesses. When we go to properties, we could visit all of our properties in one day. We could see a broker or two versus, if I had properties in all different states, it's really hard to get to. We visit our properties on a monthly basis, and that adds a lot of value to our properties because our staff know that we're going to be visiting on a consistent basis. We're not going to always tell them when we're coming, and they're going to perform at a higher level.
Yeah. It's one interesting thing is because if I'm passively investing into a deal and when I'm reviewing it, and now I've like changed around how I do it in the sense of like what's most important. And when I see operators that have multiple assets in one area, especially, and they've had it with the same property management company, and like, so there's like five or so that are by managed by this, and then you just like get a really good feeling because you know that they work together, that manager is most likely not going to be switched out where, which is a huge mess. You know what I mean? And it's just everything like works together. And I think it's just a super important piece, and property management is probably the most important piece maybe of the whole puzzle.
Yeah, yeah, you really need someone that you can rely on. We have in Tucson right now, we own 7 properties, but they're managing 50, 55 properties. So I get the insight and the buying power of their whole portfolio, which is really important. And I'm not looking for a company that is like a yes company. I want them to push back and say, well, you're not going to get those rents when I'm looking at future properties or we're talking about our own properties raising rents. It's a partnership. They are an arm of our team, and super, super important.
Yeah. It's also if I'm mentoring new multifamily investors and I tell them to bring that property manager in earlier than later and if compensate them, whatever they need to do, review your numbers and everything. Because, they decades of experience most likely and thousands of units that they've worked on. And they can tell you this renovation is completely off. You can't get these rents. They can give you some very boots on the ground information, which someone just underwriting a property from hundreds of miles away just doesn't know. You know what I mean? And it's just kind of like one important part of it.
Absolutely. And things change so quickly. One property that's 2 miles away can have, total different, rents and things that work from a marketing standpoint. Um, Someone in your submarket could drastically reduce the price, and you're like, well, why did I drop, occupancy all of a sudden quite a bit? And so you need that expertise. You need that team that you can rely on.
Yeah, I remember my first two multifamily properties. Literally, they were the length between of maybe like a par three hole, right? And the thing that was that it was completely different. I had some that stayed like literally couldn't even get them to stay like past a year, and over here, I mean, several years. I had one that was like 10 plus years. So it's just so specific on the street. It's like it's so hyper local real estate. So one of the things we had, like we spoke about before on previous podcasts, was that you had a podcast before called and devoted to asset management. I mean, you really are an expert of an asset manager. Can you explain just high level asset management to our listeners and why it's one of the most important roles right alongside property management?
Yeah, and to clarify for a lot of people, because they don't know the difference, asset management is basically managing the manager. So they don't own the property; they punch in, they punch out, and so for us, we want to set really high expectations from day one on how we manage. And we have our weekly call to go over the KPIs, and we do it consistently. We go on Zoom. We could see the property manager, our regional manager is there. We go over all the different things we want to measure, and just having that consistency, they know like, hey, we're going to stay on top of that property, and they need to perform at their best if they want to continue with us. If we didn't do that, they're only going to put in the same amount of effort that we're putting in, and so the quality that we get is so much superior than other people because of that consistency, our tracking, and just setting the bar really high. And they know that that's where they need to hit. They're not trying to hit mediocrity. We want the highest level of performance for our investors.
How have you found your best property managers?
Yeah, so partly is talking to brokers and saying, hey, who do you recommend? And visiting properties. And so touring a lot of properties, we'll say, well, we really like the staff and the cleanliness at this property versus another property. So that's part of the process. You also want to interview your property managers, and then go through a process of a deal that you're looking at and have them underwrite a deal. Now, if they're just promising you the world with rents and rent growth and keeping expenses low, that's not a partnership you want. You want realistic underwriting, and so you want someone that's going to push back on any of your things that you assume in your underwriting, because that's really really valuable. And then you want to know what else that you can leverage, because it saves me an HR nightmare for having it in house. I don't want to do that. I know some operators talk about having that advantage. I think it's an advantage not to have it, and I can rely on their expertise. Their 35 years of working in Tucson, and their whole team,
Yeah.
and so just finding the right people that I relate to. Because I talk to the regional manager probably 3 times a week, the owner of the company a couple of times a week, and so we're just bouncing off ideas. When a new property comes out, I can say, hey, do you have any data on this property? We like it. The underwriting looks good. What kind of inside information can you give me? And maybe 50% of the time they can give me information right away, and if not, then they can do a little research. But having that partnership is so incredibly valuable.
Have you found it that your best property managers are already have properties they're managing near where your target is or where you're already buying properties, maybe areas or parts of the market?
Yeah, I've never hired a property management company that wasn't already in the area. I want them to have that experience, because that's what I'm paying them for. I want them to have years and years in that market, because finding good staff is so hard, no matter what industry you're in, what area you're in. So I want to work with someone that's been in that area for years, and this way I can leverage it. So that's yeah, really important.
One thing you said earlier, Gary, about like you're getting more because you're getting more than just property management. And I think a good property manager provides more of this. And just like a short side note, like when I had an older apartment building years back myself, and with these older property buildings, there's always an issue with the fire department of what you're doing, stuff like this. Anyway, I remember my property manager was walking and they had someone from the fire department there telling me, all these things, a whole punch list of stuff that had to be done. He was telling my manager's telling me this. And he goes, you know what? Like, we got it narrowed down to these 2 things you're going to fix and everything's going to be fine. And he's like, if they don't accept this, like, I can call the chief. And you're like, I can't call the chief. I don't have, you know what I mean? Like, you've been there for 25 years. Like, that's what I'm paying you for too. I'm paying for you to, be smart on the ground and make sure everything works, but also like, you know, pull, to have those relationships and those contacts that I don't have. You know what I mean?
Just like anything else, it's a relationship business, and it's yeah, to have to know the rules and regulations over the years, to have a lawyer at hand to deal with maybe some issues in that area. All these different things are just incredible for your success.
So your company has experienced massive growth over the last few years. Can you share some insight of how you scaled your business from, I think your first property was just under $2 million to buying a property for $59 million, and like what that process was, and maybe give us a little insight in your first property too, like kind of how you got involved with your first, real multifamily deal.
Yeah, so we were looking at deals for a couple of years, underwriting, and so those were all the deals I didn't get was great because it was a learning process. It was doing the reps. They Malcolm Gladwell talks about 10,000 hours. So each time I'm gaining experience and fine tuning my underwriting, and gaining more confidence. So we bought a 42 unit, 1.65 million. It looked like a rundown motel. Had the wrong phone number on the property, and we should have bought the block at that time. But a new paint job, we changed out the doors, and it just looked, so much different already just by those two things that you would think that anyone in their right mind would have done. We were increasing rents 50-70%. And residents were staying because they saw the value. The rents were so cheap when we took it over; it was insane. And we finished our value add plan. We actually added a premium. We added 5 new units with a higher renovation level to sell the value add to another buyer, and we sold that within 2 years of purchasing it for almost double investors' money.
Wow. That's pretty great. Yeah. But they're really happy with that one.
Yeah. Yeah.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. So kind of what have you done? Give me some of the important maybe software or systems that you've integrated into your business and to assist you with scaling that maybe someone starting out can start utilizing as well in hopes of scaling their business.
Yeah, having systems and processes are so important, and even to this day, we have a team of 7 now. We're constantly working on those systems, but something as simple as our weekly check-in, it's on Google Sheets, and we have a tab for each week, so we can look back at any point in time and say, okay, where we were with delinquency, occupancy, where our rents were, when did we change rents. We have a Google Sheet in that has a to-do list, so we can hold our team accountable. We have our CapEx tracker. So all the key information for that property is on that Google Sheet, and each property has its own Google Sheet as well. CRM, super important for developing investors. Obviously, on our first deal, the raise was really small. It was only $1 million. On the $59 million deal, we went to $20 million. Didn't do it all ourselves, but we built up a really good reputation, so other people wanted to work with us. And that starts with loan brokers. It starts with brokers on the properties, because they know, like, and trust us, and other people that we could partner with that could potentially bring in some capital as well. So you develop that over time. It doesn't happen overnight, and we just focus on quality buys. It wasn't about quantity, it was about quality. So there have been gaps. I mentioned the 17 months, but there was another time we went 12 months. So it's just, you're only as good as your last deal. And so we weren't racing to do all these different deals. Certainly after we got our first deal, we're like, all right, we're going to bang out like, 3-4 deals a year. And that just hasn't been the case. I mean, there has been one year where we did 4 deals, other times 0 or 1 deals. It's just staying true to our criteria. Other systems, just tracking data. Every deal that we underwrite, having all that information allows us, like I said, to make better decisions, more informed decisions. So you don't have to spend a ton of money on software. Certainly there's some good software out there, but there's a lot of free resources or inexpensive resources to help you perform your best.
Yeah. Yeah. Like you're saying about the Google Sheets, stuff like that. I mean, we track KPIs. We have some of our assistants like put that in every week. And then when you look at it, it goes on Wednesdays and Thursdays. When you look at it and you're like, wow, you can see the progress over the years and kind of what's happening, what slowed down, and kind of put little notes to the side there. What was the difference between this? And yeah, it's really, I mean, it really transforms nothing grows if you don't track it. Right. So it's, and that's in anything, you know what I mean? But one last thing on this, on your scaling, I just always wondering, I mean, what was your most important hire that you had that maybe transformed it? Maybe one of your first hires?
Yeah, the team has been so important. I couldn't say one particular hire was the most important, but certainly we started with our executive assistant, which started taking things off my plate and really helped with the back office, so I can handle more of the higher level responsibilities. And then we hired an acquisitions/asset manager to again handle more of the day-to-day stuff, where I can hire more higher level, deal with the brokers, deal with the deal making. Then eventually I hired an investor relations person and then a director of operations. I would say I was probably a little slow on hiring each person along the way. You're cash flow poor and real estate rich, so but you have to invest in this in your business. It is a business, and those that do invest and look for the long haul will be the best people that you want to invest with.
Yeah, usually when I speak to business people, it's the assistant is usually the first assistant they hired was really like transformed everything. Because it takes a lot. When I had my first assistants, I wasn't like giving them anything. And then you just start like, as you get comfortable, you start just everything you can, you just throw it, take off your plate as much as possible. And it really, transitions your business into an actual business as you start going. So.
Yep, absolutely.
With speaking with a lot of different property managers, real estate investors, what are common mistakes you probably see real estate investors make regarding, let's just say, asset management as one thing or anything else?
Yeah, I think asset management is the number one mistake. People, they don't put enough time and resources into that, and you can't just buy a property, tell your property manager these are the things we want to do, and forget about it. I'm shocked when I hear people talk about how few times they visit their property. And just because you have a call with a property manager doesn't mean, they're doing it. We've had property managers lie to us and we go to the site and it's not getting done. And we've had to fire them, unfortunately, and I want to catch them doing something good. So like I said, I don't always tell them we're coming, but we visit them on a consistent basis, and having the properties fairly close together, we could bang it out in half a day, see all of our properties, visit new ones. It's so important. You see a lot of middle people out there, capital raisers and whatnot, that aren't on the calls. They haven't really done due diligence, and I'm not talking all of them, but you want to make sure whoever you're investing is really spending the time and working through the issues, because like any business, things pop up, things break, and you have to deal with them, and you have to motivate staff, and it's sometimes whack-a-mole on these properties. And even if you're having tons of problems, it doesn't mean you still can't make a ton of money on that deal, but it's just dealing with that on a consistent basis that's so critical.
So you're being a hands-on asset manager, and you see some of the progression with people out there that go into owning their own property management company. Which I see it, I understand why you would do it. What do you see as some of the high-level pros and cons that maybe you've kind of veered away from at this point in your career?
Yeah, I mean, over time, a lot of people have asked, like, hey, you own 7 properties in Tucson right now. Why don't you start your own property management company? So my last company I owned, we had a 700 employees, probably another 700 independent contractors, and it was a low margin thankless job, which I think property management is, and it's an HR nightmare. You're always looking for staff. So my thought is I could stay more nimble, stay smaller, work with a company that's been doing it for 30 plus years, knows that territory really, really well, and if over time I don't like that market, I could switch to another market, and now I don't have to move all the staff or hire all new staff. I could focus on what I do best, which is finding really, really good properties and running them really, really well. So that's how I look at it. Some people that develop their own property management company, they talk about not necessarily the money that they'll make, but they have more control. And I think if you work well with your property management company, you'll still have plenty of control. Um, it's developing those relationships and how you work with them. At the end of the day, everyone has the same problem. It's people problem. So developing good relationships goes a long way.
Yeah, that's exactly how I've heard it too. Is with the when you talk to people, what the pro is, it comes out as control, and other than that, they're not making any money on it. You know what I mean? And obviously, it's a whole nother business you have to run, but it's also I've heard it before from people that go that route of doing their own property management company when they've had bad outcomes with property managers they found. So maybe they couldn't find the right one, or they got burnt really bad, or whatever it might be, and they've just gone in and done it themselves. But yeah, I mean, I see exactly. I mean, also with you being more hands-on in asset management, you might be able to have more control as well versus a normal, let's say, investor with their property management company.
Yeah, there's no property management company that's perfect. So if I could find a 7 and figure out, okay, how do I get them to a 9 by filling in some of the gaps and taking on that responsibility ourselves? Now my workload is so much less than having my own company, and I'm maximizing the value again, for that deal. So that's how I look at it, and so trying to fill in the gaps, and to make it the best scenario.
So, Gary, you've had successful exits. You built a bunch of companies. I mean, how's your relationship over the years changed towards money?
Yeah, that's a really good question. Definitely many, many years of being frugal. So that's changed. Definitely been cash flow poor, but investing in ways to save me time, because I do have worked a lot of hours, and making sure spending the money the last few years on doing really great trips with my kids as they get older, and don't want to miss out on those opportunities. So I'm not someone that stays at expensive hotels or buys things. I don't need that. I want really cool experiences. So taking more advantage of that. And ways to save me time and energy. That's where I focus on spending more of my money.
Yeah. My wife and I are the same thing. We're experienced people. So it's that's where we kind of put our mind at. So as we're wrapping up here, what have kind of give us like a quick thing about main factors maybe contribute to your success over the years in all these different industries, from films to other businesses to now real estate. Like how does that work? Tell us about like what you really attribute your success to.
I think one of the key words is passion. I remember I went to Boston University, and entrepreneur teacher spoke about being passionate about what you do. And I'm 20 years old. I'm like, I just want to make a lot of money. And I started a restaurant delivery service, and certainly I love eating food, but I just wasn't. It was just delivering widgets, so it it wasn't any fun. And I quickly learned that, and I'm like, that's what she meant. And so doing things that I really liked doing, so I didn't mind working long hours. I just really enjoyed it and loved picking other people's brains. So being passionate about what you do, being consistent with it, being all in, and persevering, because there are plenty of times where I've taken a punch or it didn't go my way. Maybe people didn't like the deal that I picked, or I just struggled in any which way, and just kept pushing through and finding solutions has been key to my success.
So, Gary, what do you think are some of the main factors contributing to your success over the years with all your endeavors that you've been involved with?
I think it starts with passion. I had an entrepreneur teacher in college talk about being passionate about what you do, and at the time, I'm like, I just want to make a lot of money. But I quickly learned that if I wasn't passionate about it, the energy I gave towards that endeavor just wasn't there. And so being all in, loving what I was doing, the long hours didn't bother me. I always wanted to learn more and talk to other people doing it, and that's incredibly valuable. And then also persistence, because it doesn't always go your way. I mean, there's so many deals that I lost out on the beginning, and it was frustrating. But just being persistent and consistent as well. You keep getting those reps, keep learning, and you just get better and better and better at what you do. That has allowed me to be successful.
So, Gary, how can our listeners learn more about you and your business?
Yeah, you can go to breakofdaycapital.com. You could sign up for our newsletter. We have investor resources there. There's a link to our podcast. So, yeah, all the information is on our website.
Thank you so much for coming on again, Gary, and looking forward to connecting with you here in the near future.
Absolutely. Thanks, Charles. Appreciate it.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.